Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is April 28, 2013. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. US stock market rebounded, but the volume is not convincing. My plan, I'm currently mostly in cash and have very small amount of fund bought the strong stocks when they broke out after the earning report. And let's take a look at the major indices. German DAX index is in a downtrend, although a rebound above 50-day moving average, but it has not break above the trend line, so it's still in a downtrend. Shanghai Stock Exchange index is in a downtrend. US Nasdaq index and has a very weird rebound, and it broke 50-day moving average with a very high volume, so it broke the uptrend, but it rebound quickly. However, at the high price level, had a very high volume sell off. The index closed around the half of the daily range. That is the institution selling volume, so it's not very optimistic. Mid cap is also rebounded, but it did not break the previous high, and it's also in a like a kind of correction phase. Russell 2000 is also in the correction phase. It's going lower highs, lower low and the lower high. SP 500 index is a little bit stronger than other indices, however, and they still haven't break previous high, so. Gold monthly chart. Gold has broke uptrend, long-term uptrend, and here support is at 1500. It has been supported at 1526, but it broke that support level and came down pretty quick. And last 2 weeks, gold had a very strong rebound, but it only reached the previous support. It's actually below previous support level. So if it reached 1526, that would be a resistance. Silver is also in the downtrend. US dollar seems about to roll over here. It's not very pretty chart. Crude oil is also in a downtrend here. It rebounded, but it's making lower highs. GDX is a gold mining index. It rebounded to fill the previous gap. And next leg, it looks like it's going to go down again. IYR is a US real estate ETF, and it's in uptrend. And surprisingly, it just rebounded pretty strong. XLF is a US financial ETF. It's also in the uptrend. It rebounded from a 50-day moving average. Let's take a look at some of the strong stocks in this market. The first is ARM Holdings. This company is behind almost all the tablet and smartphone technology. ARM Holdings and it made a base here, and after earning report, it gap up to break out from that base with a very high volume. Lumber Liquidator also break out from the base, gap up with a very high volume. So this is a very strong stock. LinkedIn has not yet reported earning yet. It will report earning on May 2nd. Right now, it's making new highs, but the volume is not very convincing. Netflix, and this is an example why the earning report can be a wild card. Before the earning, Netflix actually had a very bearish chart. It broke down the flat base with a pretty high volume. So that's institution selling. And the rebound hit 50-day moving average, cannot break through and came down again. That's a very bearish sign. However, on the day of earning, that was after market close on Monday, it would report earning. On Monday, it went up with a high volume. Someone knew about the earning result, obviously. On Tuesday, when the market opened, Netflix gapped up with a very high volume. So that's a very strong stock now. The earning report has changed everything. It has changed the chart of the Netflix. So now the chart looks pretty bullish. So that's another reason why taking a position before the earning report is very risky, because you never know how the market will react to its earning report. So that's a wild card. Let's take a look some of the previous previously watched biotech stock. Celgene had a high volume pull down. This stock has not yet report earning, so its risk is higher now. Gilead Pharmaceutical also have a high volume pullback. Regeneron Pharmaceutical, this is the strongest stock of all the three. It broke out from this flat base, and then breakout is still valid. It's making another base on base. What to do in this market? First of all, watch out for the earning date. I would not buy or short stock before the earning. And after the earning, if the stock break out from a base with a high volume, and that may be bought, but buy the gap up and has some strategy. You need to put the stop order right below the gap, so that in case it fill the gap, you will get stop out. And so you only hold the stock that has a breakaway gap. That means a stock gap up and never look back and keep on going higher. So that's a stock you should keep. That's all for this week. See you next week.